You know, every single day, something happens billions of times that most of us just take for granted. It's a transaction, and it's powered by a silent giant of the financial world. So today, we're going to pull back the curtain on that giant, Visa. We're going to look at this invisible engine that really drives our global economy, how it all works, how they make their money, and what the future could possibly hold for this absolute titan.
I mean, really, think about it. You tap your card to buy a coffee or swipe to get groceries. It feels instant, right? Like magic. But in that tiny little sliver of time, there's this incredibly complex dance of data zipping around the globe. So what is actually happening behind the scenes to make that whole experience so seamless?
Okay, so in this first part, we're going to demystify that whole process. We're going to break down the journey your money takes and reveal the critical role Visa plays as the ultimate financial middleman. Ready to see how the trick is done?
What a lot of people don't realize is there are actually 4 key players in this lightning-fast process. So when you tap your card, first, your bank, they're called the issuer, gets a ping to make sure you've got the funds. Then, a payment processor, think of companies like Stripe or PayPal, acts like a secure messenger, packaging up all your card details. And that's where Visa comes in. As the payment network, they're like a super fast, super secure highway, routing that approval from your bank all the way to the merchant's bank, which finally gets the payment.
Now this right here is a really crucial distinction to understand. The payment processors, they're on the front lines. They handle the data, sure, but here's the kicker. They take on the credit risk. The processor is basically fronting the money to the store, betting that your bank is good for it. Visa, on the other hand, they take on zero of that risk. They are simply the secure, incredibly reliable information highway. They get paid for providing the road, not for guaranteeing the driver. It's a brilliant setup.
And that idea of being the highway, well, it brings us to the perfect analogy for Visa's entire business model. If you think of money as traffic constantly moving around the world, Visa basically owns all the most important bridges and highways. They are, for all intents and purposes, a global toll booth.
The analysis we're drawing from puts it just perfectly. They are a toll booth that cannot be displaced in today's world. Just think about that. Visa has built an infrastructure so deep, so embedded in global commerce, that it's become almost impossible to avoid. For nearly every digital transaction happening out there, Visa is present, collecting a tiny little fee. So, let's get into the nitty-gritty of how this toll booth actually works and why it's such an incredibly profitable business. How do all those teeny-tiny fees add up to billions and billions in revenue?
All right, so Visa's income comes from a few key buckets. That biggest slice of the pie you see there, about 1/3 of their revenue, is services revenue. That's the small percentage they take on the total dollar amount of every single transaction. Then you've got data processing, which is a fee they charge for the sheer number of transactions they handle. But the real cash cow? International transactions. When you buy something from another country, it involves currency conversions and all this cross-border complexity, so Visa gets to charge much, much higher fees.
Now, this is one of Visa's most powerful, almost secret advantages. Inflation. I mean, for most companies, inflation is a killer. It means higher costs for everything. But for Visa, it's the exact opposite. Since their main fee is a percentage of the total sale, when that coffee you buy goes from $4 to $5, Visa's revenue on that one transaction just went up automatically. They don't have to lift a finger. It's a built-in tailwind for their business.
And this business model makes Visa what you'd call a stalwart. It is unbelievably resilient. Just think about this for a second. Even when the entire world ground to a halt in 2020, Visa's revenue only dipped by a mere 8%. Why? Because as long as people are spending money on something, Visa is making money. And consumer spending is one of the most reliable, long-term trends in the entire global economy.
But of course, no company is invincible. It's not all smooth sailing. So let's take a look at the major forces that are shaping Visa's future, from the risks on the horizon to the powerful catalysts that could drive their next wave of growth.
Okay, so on one side, you've got the headwinds, the risks. The rise of crypto is a big one, threatening to just bypass Visa's network completely. A weak job market could mean people spend less. And let's be honest, right now a lot of investors are totally distracted by the hype around AI stocks. But then you look at the other side. Visa is actually fighting back against crypto by using its greatest weapon, its 70-year-old brand. In a Wild West crypto world, a trusted name like Visa offering secure access could be a huge deal. And then you have massive events like the 2026 FIFA World Cup coming to North America, which is just going to unleash a tidal wave of those super profitable cross-border payments.
Another potential tailwind that the analysis points to is government stimulus. Things like tax cuts or direct checks that put more money into people's pockets.
And look, regardless of the politics behind it, the logic for Visa is really simple. More money in the economy almost always leads to more spending, and more spending is great for transaction volumes.
So finally, let's zoom in and put on our investor hats. What does all of this mean when we look at how this financial giant is actually valued in the market today?
The key number to look at right now is 28. The company is trading at about 28 times its normalized earnings. Now, a number like that doesn't mean much by itself. We need some context to figure out if that's high, low, or just about right.
And here is that context. A multiple of 28 basically means the stock price is 28 times the company's annual earnings per share. This puts Visa in the 23rd percentile of its own 10-year valuation range. Or, to put it more simply, compared to its own history, Visa is cheaper today than it has been for 77% of the last decade. The analysis we're using points to moments just like this, when a fantastic company is trading on the cheaper side of its history, as being really attractive entry points.
So what kind of return could that actually lead to? Well, the analysis projects a plausible annual return of around 13%. And that's not just a random number. It's a combination of about 10% from earnings growth, fueled by that steady rise in consumer spending, plus about a 3% yield from all the cash they give back to shareholders through dividends and buybacks. And that really leaves us with the big billion-dollar question. Visa is this dominant, super resilient company with a phenomenal business model, but it is facing real threats from new technologies. The analysis suggests its brand, its massive scale, and its surprisingly attractive valuation give it a powerful edge. It really makes you wonder, in this fast-paced world of flashy fintech, could the most powerful force for the future of money still be the one that's been hiding in plain sight all along?